And there you have it. The markets are officially closed on this Wednesday, November 6th. Welcome, investors and traders. I'm AJ Monte, and we had a wild day today. Day after the election, the Dow was up over 1,500 points. I can't remember the last time that's happened. But the interesting thing is, we were talking about the possibility of the upside gaps filling, especially on the Qs, and I'll get to that in a moment. If you go back and listen to the recording right around the 4 to 4.5 minute mark, you'll hear me talk about the gaps. And the reason I'm bringing that up now is because this massive gap right here, I believe, will fill after the adrenaline pump starts to subside. Now, first and foremost, I want to mention that on Friday, I'm going to be digging deeper into the reasons why I think investors are settling into a false sense of optimism here, assuming that Donald Trump is just going to turn the economy right around on a dime. You have to understand, if we were looking at the markets as though they were an oil tanker, you can't turn an oil tanker just right around 180 degrees and think you're going to go the other direction. Whatever you believe about this economy or whatever you believe Donald Trump can or cannot do, I'm waving the caution flag, because false hope in one individual, whether they're the president or the Fed chairman or whoever, could get you into trouble. Okay, so keep that in mind. So I still have that long-term downside target on the diamonds of 411 and change down there, 411.32. But in the meantime, once we see the drop in volume here, and we could see that by Friday, I do believe we're going to see a pullback, a pretty dramatic pullback after this all settles in. And let me show you why that will be. If I go and use my Fibonacci retracements here, I'm just going to go from the low that we had on Monday and go right up to the high. I could even go a little bit higher, assuming that we might even get a little bit of follow through tomorrow. And you'll see down here is the 50% retracement on the diamonds right around the 427 level. You see that 427.70 in the data box down there. So if that happens, then we are right back into a normal rhythm, if you will, of the markets, where we'll see short-term up legs, short-term down legs and such. Remember, the inauguration is not until January, and there are still a lot of things that could happen between now and January, so stand by for that. I know I spent a lot of time on the diamonds, but I want to make sure I get that message out to make sure that people are not overreacting. Here we go again, IWM. It opened up big time and closed with a hanging man. Let me zoom into the charts right there. A hanging man is extremely bearish. Notice the hanging man right there. Here's another hanging man right there. You see that? Here's a hanging man. Look at that. On every single high that formed the pivot point, there was a hanging man within close proximity, almost exactly at these highs. And so I believe that we're going to pull back towards the end of the week. I don't think we're going to hit this downside target anytime soon, but I am keeping it in place down there at 212.78. If you've been following along with my reports, you'll know that about 90% of our positions are bullish. One of the big home runs this week for our equity traders, yesterday, right after the open, we got into DJT, and then it opened up $11 higher. Now, for a shout out to the equity traders, hopefully you took your profits on that. If not, you're still up. But if you didn't take your profits after $11 gap up, then you got to make sure that you're taking profits. Because remember, you can never lose money taking profits. Just another stock that I like to report on is if you're looking at the CVX or you're looking at OIH, these are positions that we have. You can see that those have gapped up quite nicely. We have positive delta positions on these. Our option traders today took in some nice credits. On OIH especially, we took in almost an $8 credit today on our spread. And if you want to learn how to trade options the way we're trading them in a very conservative way, just come over to StickyTrades and you can enroll in our 15-day free membership. There's absolutely no obligation whatsoever, no credit card needed, none of that. You could just plug into my webinars, especially the one tonight. We got the rapid fire stock analysis session from 6 to 7. I always look forward to Wednesdays because of that one webinar. And we'll go over 50 to 55 stocks, maybe more, in an hour. And we hit those targets quite regularly. So that is what happens on Wednesday. So now moving on to IWM. If you look again, that's what I was talking about, the hanging man. I think we're going to go lower. Not going to put a downside target here yet. We'll see what happens on Friday. I don't draw my target lines, as you know, until Friday. But right now, longer term downside target 212.78 for IWM. Looking at the Qs, again, go back and listen to the recording from last week. Right around the 4 to 4.5 minute mark, I said there's most likely going to fill this gap right here, which we did, and then we gapped right through it. So now that the gaps are filling to the upside, we have to now look for the gaps to fill on the downside. 80% of gaps fill. Where do I get that number from? Well, 42 years of experience in charting. I started off charting by hand before we had computers. I always watched where the gaps were. I always tracked how they filled, how often they fill, and what happens after they fill. So there is a chance that we could fill this gap here and then maybe even bounce right off of that moving average. You see, that's what happened back here. We filled the gap right there and then it bounced. It went the other way. That happens quite often. Here was an open gap to the downside. It took about 4 or 5 days, and then it reversed right there. Upside gaps are the same way. Look at this gap back here. Took a while to fill, and then what happened? It reversed and went the other way, right? So that is something you can count on. They are great for setting price targets. They're great for establishing entry points. And when you learn how to trade gaps, it makes things a lot easier with your trading. So my longer term downside target still in place right there, 464.86. And shorter term, we got the move to possibly fill that gap, maybe even by the end of this week. We'll have to see. SPY, same thing. And then I'm going to wrap it up with the VIX. We got the hanging man, same story. Think we could pull back to fill that gap. Longer term downside target right there is 555.58. That brings me to the VIX. Now, with the VIX, 100% of the gaps on the VIX fill. That is a guarantee. Why is that? Why can I give you a guarantee that that VIX will fill the gap? Because the VIX is not a stock. It's an oscillating index. Therefore, I can make that claim, and I will today. I'm going to give you a guarantee that that gap will fill. So while I still have an upside target on the VIX back here at 26.68, I'll put a shorter term target on that gap fill right there at $20.20. So we're talking about almost a $4 move to the upside on the VIX. Can you trade the VIX? Yes, you can. There are many instruments out there that will allow you to trade volatility. VXX is just one of them. Just be careful because some of them are leveraged. But that is a guarantee that I'm going to give you. I can't tell you when, but the guarantee is it will fill at $20.20. So thank you so much for liking and commenting. For those of you who are commenting, thank you so much. You're helping us get eyes on the channel. We are growing this channel like crazy. Thanks to all of you sharing it and liking it and subscribing, doing all that good stuff that gets the algorithms going, and I really appreciate it. So with that, I will let you go, and I'll talk to you on Friday. So long.